Hi everyone. Today we are gonna talk about iRobot, a company and its stock, and probably a lot of you already knew that company as from its vacuum and the mop cleaners, but as a stock, most of you probably never heard of it. And but now it is an interesting merger arbitrage play on the stock market as Amazon announced that it wants to buy the company. So let's start. Firstly, I will tell the risk reward in a nutshell, and later we will go through each of the point. So let's start. The reward is that currently the arbitrage is extremely big between the announced buy price and the current share price of iRobot. So Amazon announced that it will buy iRobot for $1.7 billion, which is $61 per share, and now it's $41. The company is trading at $41 currently, which means that it is a 50% kind of safe. It is a 50% kind of safe return, of course, if the deal goes through. And then we go to the risk, we arrive to the risk. What happens if the deal will not go through? Uh, you will left with your iRobot shares, where which company has currently operational problems. The recent financial performance is a big dumpster show, really bad, and there is a question in myself that the management was misleading investors in 2021 at their investor day. They made terrible assumptions. We will check it. And lastly, in the last years, iRobot and its management made really bad capital allocation decisions. Previously, it was not true actually for iRobot, but in the last 2 3 years, like it was they were not the good ones. Um, we will check that part also. So, will the transaction go through? That's the real question for the thesis. So currently, uh, both in the US, in the EU, and the UK regulators are checking the transaction or the merger because there are some questions in the regulators about the outcome. One is that, for example, Amazon could restrict the sales of iRobot's Roomba, which is the market leader. Roomba is the market leader in the US and mostly in the developed world in a lot of like the higher end robotic vacuum cleaners. So Amazon could restrict the selling of those products on other platforms. That is a risk, according to the investigators. And I brought to you one really good quote from Elizabeth Warren, a Congress member who is against the deal. I will read it out. So, given Amazon's record of infringing on consumers' privacy and their ongoing history of anti competitive mergers to increase their monopoly power, the FTC should use its authority to oppose the Amazon iRobot transaction. So, what does it saying? Like, they are really scared of that Amazon will use the data which iRobot gathers when basically the Roomba is going around your home. They can record spaces, and for Amazon, it's extremely powerful to get even more knowledge. And also Amazon did in the past some anti-competitive mergers, obviously, which is not really great as in the regulators' eyes. And for the European Commission, it's basically also they have the biggest concerns about privacy of the customers, how Amazon will use the the data from iRobot machines. However, historically, around 90% of mergers are accepted. Uh, So it means that usually when a merger is announced, it will go through. But this one is no question much more likely to be blocked compared to the average. I don't want to say here numbers like how much more likely, because it's no one can say that. It depends on the current political landscape and all of the people involved in that. But it is more likely to be cancelled than 10%. Um, However, there are positives for the deal. Mm, for example, there can be synergies after the deal. iRobot spends around 400 million in selling and general administrative costs. So when the products will be sold on Amazon, this number will practically will go down by a lot. For example, Roombas are one of the best selling products on Amazon Prime Day, and Amazon is the biggest platform for iRobot selling its vacuum. So it's practically Amazon taking like we don't know how much, but probably around a few percent, maybe 5% for just selling there. So at the end, this could end at the customers, some of it at least. So this is beneficial for the customers. Um, and this is an interesting thing that Amazon will have to pay iRobot a termination fee of 94 million if the deal fails due to regulatory opposition, which means that two things: that iRobot is getting around 100 million, which is not bad for iRobot if it cancelled. However, I think there are more bad things than 100 million if the deal will not go through. And the other thing is that for Amazon to pay 94 million dollar, it's not a big deal. So if they want to cancel it, they can just go through it and cancel. This is a risk for the deal. However, probably Amazon want to go for it. It's like their revenue is like a lot of times more than that 1.7 billion dollar um fee which will pay for iRobot. This should not be a problem. That 1.7 billion for Amazon. So let's continue with the operational problems. What I mentioned previously, what we can see here that the revenue in 2022 is practically declined around 40%, 30-40% than the previous 2 years, which is really a lot. But we can say that macroeconomic environment, it is it is hard now to be a retailer. And but let's take a look for cost of product, cost of revenue practically, and we can see that there was around 40 decline in revenue. However, the cost of revenue just declined 20%. So it is clearly visible that the costs for one unit went up. And so this tells that they are not managing well now currently mm, the cost for producing those products. This is alarming. We can easily say. However, they said that they had a big problem about chips most of 2020, 2021, and I think it went also for 2022. But still, like, so if it was in 2021 also, then they were managing it better. Yeah, the 2022 was a really bad year for the company. And on the other side, let's check the SG&A, which I previously mentioned. Uh, there we can see that it's also an increase, 10% increase every year. Currently, with even less selling, less revenue, really bad. And net income minus 286 million. Keep in mind that currently the market cap of the company is around 1.1 billion. They lost one third of the market cap, or 25% of the market cap. The last years they made some money. If you calculate, like for example, 1.1 billion, if they would make 150 as they did in 2020, then it can be a cheap stock anyway, despite if the merger not happens. But this is a big question, like what is going on. Are they losing their competitive advantage? They are managing worse their operations. uh, Probably a little bit both. And another operational problems. Cash and cash equivalents decreased significantly, like around 80 million, 117 million of cash, compared to that they were losing 286 million. It's really a lot. Can be alarming. However, probably this year they will not lose this amount of money. They will lose some, but not that much, as they were telling already that basically they are selling the inventory which they currently have, and they are muting their ordering for materials and slash 70% of workforce. So there is some cost cutting in the company, which is the good thing. Is at the same time current liabilities decreased. Total current liabilities decreased by 100 million, and there is practically not so much long-term debt, 63 million. So it is also decreased. That's a good thing. So they can raise more debt. Probably it will be not a problem for them. So I don't see a risk of the company going bankrupt. That's I in my opinion that's not a valid risk. uh, However, it needs monitoring in the future. If they will lose that same amount of money, then it's a question. And let's go to the next point, which is the misleading management. Okay, so here is from the 2021 investor day, a slide about long-term financial model for 2024. They were expecting, or for 2024, 7.5 to 9.25 EPS. Okay, let's check what is expected now. It is from Seeking Alpha. 2024, they will gonna lose around $1. And now the question comes to everyone, that they were misleading on purpose, or they are just made extremely bad assumptions about the market, macroeconomic environment, and their abilities. Both are really bad. Maybe both are true. So this is also an alarm. However, we can see in the past they were managing to make some profit around $4 in the past years. So this is like now the company share is trading around $40, which is basically uh, the COVID low. It was that much cheap at that time. Um, so yeah, the company is cheap, but they have significant issues, which puts at the end that maybe it's not so cheap. But now we are focusing on the merger mainly, but taking account to the risk. What if the merger do not go through? And this is one part of the risk about bad capital allocation. So, firstly, they were purchasing shares uh, through the third quarter of 2021, when the company's share were around 980 $90. Now we are at 40. They spent an insane amount of money compared to their market cap for share purchases at an expensive price. Uh, at the average actually was 83.46 dollar per share. As you can see here, this was the period when they were buying back shares, and we are here now. So it was at a very bad time. They should not do it as an accelerated share repurchase program. Probably they would just need to announce a share repurchase program and decide when to buy. Like here, lower can could be better. It's again about the management and its capital allocation and their assumptions. They were not good. And the other bad part of capital allocation, the company bought Iris, which is an air purifier company, for $72 million. I was checking in third quarter, Iris contributed $2 million of the revenue of iRobot. $2 million, and let's put four quarter, so it's like around $8 million run rate, maybe a little bit more because it was not the fourth quarter, but maybe like 10 million. Okay, so basically this is around, even if it's 10 million, it's their yearly revenue run rate. It's 7 times sales. 7 times sales is extremely expensive for a company which are selling basic product. I mean, it's high. It's for high-end consumers, but it's still not a software company. Or yeah, so it's not a software company, for example, which where there can be like 7-10 times sales reasonable, but not a consumer discretionary company. And they were again telling like Exit Air to be $150 million plus annual revenue product category over the next several years. It's like how many years? What kind of growth rate they are assuming? Like it seems it's insanely far. Okay, and the final verdict. The positive is that there is a big reward if the merger goes through. It is a 50% profit. You will get it probably in 1-2 years. Pretty much from now, in 1 year it should go through. It should be some decision. On the other side, the negative. This merger arbitrage is riskier than the average one. And if the deal won't go through, you're left with the company's shares, which performance in the current macroeconomic environment is definitely not good. So my final verdict is up to you. This is really like an up to you and up to your risk appetite investment. Uh, you need to decide how much risk you are willing to take for that merger arbitrage. I would say this is a buy for a speculative portfolio, even a not so much speculative portfolio, but with around a few percent of allocation from your portfolio. But this is not an investment advice. You need to do your own diligence. And let me know in the comment section what do you think about iRobot and that merger arbitrage opportunity. And drop a like if you like this video, and also you can just suggest which stock I should go through as a small analysis. So don't be afraid to comment a company's ticker there. Thank you very much for your attention. I hope you enjoyed the video.